Good morning. How are we all doing today? Fed vacation day? Fed's not being on vacation. They're going to give us the big news. And so after yesterday, we had, remember day before yesterday, I said that we had the most excessive or extreme amount of put buying in multiple months. And we had to go back, whatever it was, I think back to April when the market first sold off back then. So it was the second worst of the year, which was a good thing because we want to see those option traders loading the boat with bearish bets. And that was able to push our sentiment gauge to a relatively low level. I'd like to see maybe a little spike down. Maybe we're going to see that today. In any event, we have breadth and sentiment at historical extreme levels that have triggered a buy signal. So now we need to see a pattern set up here. And maybe we have one. You know, the Nasdaq Futures, which we're looking at right here now, we got a little bit of a green day right there. We're down to this level of support. I'm still concerned that the weekly charts look awful. I mean, actually, the Nasdaq futures look probably about the best of all of them. It is on some support down here. It's pretty messy. It had that giant big weekly bar, but it's holding this low. So it doesn't look so bad. So I'm thinking, like, we got this buy signal. What we're going to do here, what I'm going to be doing is looking at what showed some relative strength. Probably most of even what showed relative strength probably looks like crap in the moment. But we'll get an event day, either maybe it's going to be today. We'll see if the news comes out, or tomorrow, whatever. And we should get some kind of a rally. So getting a buy signal from the internals doesn't always mean today's the day, right? Sometimes you get a couple of days or so. It just puts us in the area. And historically, these signals work extremely well. So that's where we're at here. That's where our bias is. Earlier in the week, the way things looked, I'll go through the rest of the futures chart. We started with the weekly time frames. And so this was, let's just move that over there. It was the initial move down. Right? There was that big nasty bar. You know, this is the current week and it's down near the low of the year. And historically, this pattern would result in a move down to here. So internals being where they are, that doesn't mean the market can't go lower today. And maybe that news comes out and hysteria hits and it does go down there. What if it does? Well, what you should do, now we'll kind of associate this to the S&P 500, the spiders, is set an alert down there. And if we see prices down here, it's like buckle your seatbelt and just wait for like that 5-minute reversal or W bottom or whatever your favorite pattern is and get ready to press the button. And it's just that is what works, and give some room to wiggle. You know, don't go all in. Give yourself some buying power. You know what I'm saying? Be smart. And we could look to add, because these things, when they happen, they don't turn on a dime and just rip, but they usually wiggle around. But we got 2 weeks for this supposed Christmas rally that should come now that we have a buy signal and the market being beaten down to the extent that it did. So let's see how it plays out. But okay, so we've got this level down here. I'm just going to set an alert here, but then I'll set my alerts in TC2000 as well for the spiders. They don't get futures, so I'll have kind of backups, so to speak, if it should go down there. Let's look at the daily chart of these S&Ps. And so we got a little bit of a green day here. And so this is kind of our measured move, which is here, maybe it holds here. I don't know. This is a vertical move down. This type of a pattern historically, it could pop up and you would get a retest. It's not jumping out here saying, hey, this is just a no-brainer. It's not a no-brainer by any means. Where if we were to go back and look at, back here where things had slopped around a little bit, here's your big range expansion and volatility, going bananas. And here's the retest. And now you start seeing bottoming tail bars and narrow bodied bars and all of that. That's a no-brainer. Don't take me literally, but this kind of pattern was like, go mortgage the house, take the kid's college fund, borrow some money from your neighbor and get ready to put it in the market. Do whatever. This is not that. Right? This is maybe this. Okay, it's setting up a low and we get that, and maybe next year we get some kind of retest and we'll see what happens. That's what we do. We get signals in the moment. We see patterns. We put them in a historical perspective as to what is the best of the best, what is okay, and we get our bias in alignment with what makes sense. Not seeing, thinking like, okay, this is it, and I'm trying to say don't make a mistake because, we don't have what we had, earlier in the year. So the internals being where they are, it's setting up an opportunity where we can make money, but it's not a situation where we're likely to see the market trend up for the next 6 months. Let's put it that way. Not without this doing some more work, and that'll develop over time. But right now, maybe we've got a situation where, hey, this news is coming out. The market may go a little bananas at 2 o'clock. We don't know to what extent it's going to do. But once that's over, other than this BS that's going on in Washington and whatever, I think it's kind of discounted for the end of the year. And, we buy what we, look at and say, hey, this is what we want to own, based on whatever it might be. Okay. And we'll get to that. Dow, pretty much the same, held that line of support there, which is, that bottoming tail right there. And as I said earlier in the week, this type of a pattern on the weekly is one in which it typically would drop even lower. So maybe that's in the cards. Now, we have different technical concepts, trading concepts, and one of them is about retracements and being a greater than 100% retracement. And what that means is historically, what often happens is that when prices retrace more than 100%, where they had gone up and now they pull back. And remember, this thing did spend some time filling the tank back up to push to lower levels. But when there's a slight stabilization and you get a greater than 100% retracement where, the stops get taken out, that's usually where the bounce comes. And we've all been in situations where, we put our stop under some low and prices are going down and they look like they're going down to zero and it breaks through there and there's a little flush and that's when you get the pop. And that's what that greater than 100% retracement concept is based on. This is a concern, this consolidation that happened here, this wide whippy area. So we'll see how that plays out. Let's clear that up, go back to the daily time frame, and pretty much the same as the S&Ps. This within this time frame, the measure moved down. It's sitting on support. We'll see what kind of whip goes on here today on the news. Bonds continue to inch up here, and of course that means interest rates are going down. And if the Fed is going to raise interest rates today, we'll all find out. That puts this chart in play, meaning here we have yield curves of different maturities against different lengths of time. And you can see we're getting close to, well, there's the zero line, right? There's the zero line. Yeah, maybe they're going to George, maybe they're going to get it out of the way and they'll be done with it. Good morning there on YouTube, everybody over there. Give us a thumbs up. Share the channel. Great that you're here. By the way, Dan and I will be on at 12 o'clock in the chat room. I'll drop the link to you guys, but we'll do it on YouTube as well. But this is what we need to be looking at into next year, right? So if the Fed raises interest rates and these long-term bonds keep going up and those yields come down, this is going to invert, and that historically leads to a bear market. So we have short-term internal gauges, we have long-term internal gauges, we have intermarket analysis, and we just have our everyday technical analysis. And we put that all together to what I've coined techno fundamentals. And so putting that all together, we come to a bias, short-term, intermediate term, and long-term. And so we'll just see if these become inverted or whether, it's a narrow miss and whatever. Yeah, everybody's talking about this narrowing, and this is what is happening, is that the shorter and longer term yields are getting closer and closer together. And we do have, other warning signs that historically we've seen in the past when that happens, and that being transportation stocks going down. You go back and look at the year 2000 and when the market topped out, transports were already going down for a period of time, and then yields inverted. And so, that recipe for devastation is out there. Our job is to monitor it and see how it all plays out, and then not, be the ostrich with your head in the sand, especially if you get caught into something nasty. Capital preservation, that is got to be your focus. And then after that, the smart thing, how do we make money from it? Whether that's buying puts, shorting stocks, whatever the vehicle is, right? Focus on where the power is. And that means multiple time frame alignment of trends. Okay. So transports looking bad. Russell looking bad. And we've got this buy signal, right? Which things always look bad at the time you get a buy signal. That's what it's about. This is what creates extremes in sentiment and breadth. Now, there's no green bar here, right? We looked at the futures. They're green today. That doesn't mean they're going to be green in 30 minutes. But we've got sentiment here pushing down to a historical extreme. We've got breadth inching down into a historical extreme. Day before yesterday, option traders were loading the boat with bearish bets, right? The most extreme in quite a while, right? So we do have a historical scenario where the markets have been close to a tradable low, right? So that's what we're going by. So this is not like, Greg's or Master Traders or Dan's prediction about, this is about looking at historical scenarios that have preceded a tradable bottom, right? Now, as I explained, what kind of bottom? Is it like this is an amazing bottom for the next months or year? Hell no. Right? This is something that maybe, Santa comes to town and everybody's happy, and, then we'll get a retest next year, and, the holidays will be over, and, everybody's Christmas money will be gone as the markets go down. But this is the scenario that we have right now. And gold still kind of hanging there. I guess this is going to could be a pretty important day for gold. The Fed does raise interest rates. That could put some selling pressure on gold there. So that's something that will be interested to see how that shapes up. And of course, that relates to the dollar, and the euro has found at least a short-term bottom here, and it's moving up towards some resistance at this level. And other than that, I'll hand it over to Dan, and we'll see what else is moving.
All right, good morning, everyone. Yeah, we got, the fears started yesterday afternoon into the close about government shutdown again. I think that's what caused that. And now Trump, I don't know, maybe trying to play nice and not shut the government down. Politics, kind of annoying. All right, so pre-market here, let's just focus on the daily chart here on the bottom, 15-minute chart above. And open trades, we do not have many. We have Mighty Mo. We covered half into the close yesterday. That's a swing short. Twitter, we have a put spread. Wow, that's it. We have very little inventory. Let's look at some movers here. J-Bull, gapping up here, 24.5. Gapping right to resistance, nothing to do there. LRCX, I think, is down in sympathy with Micron getting whacked. Micron had earnings. And I've been saying here, I actually was going to put this in the advisory letter over the weekend, but I know it had earnings last night. When things yes, it's on support. And this is kind of related to that topic that I go back and forth with Alex on about, yes, there's major support to the left, but you have to put it in the context of what's been going on. It's like a wrecking ball. So yes, that was major support. Yes, that was a retest, but I got declining moving averages. I got green bars ignored. I got 100% retracement. I got 1, 2, 3, 4, 5, 6, 7 weak bars here. And so that is diminished this area as support. So when those bottoms fail, they're going to go down to the next level. It was similar to our discussion we had one day on Tilray. Right around here, we were talking about shorting it right there. And so this prior support was, no, actually, I forget, it might have been this big, whatever. But it's all of this overhead resistance, price void below, diminished these prior areas of support. Here was another one yesterday, EQIX. That's a bearish 1, 2, 3. And even though you can go out on a weekly chart and say, hey, what about way the heck over there, there's support. Yeah, but you got to put it in the context of all of this bearish consolidation. All right, FedEx had earnings, is getting whacked. Now, gapping down after a climactic buy setup, do you all think, what do you think the proper mindset should be? To go long or short on the gap down? It's a climactic buy setup. No, definitely wait, but that wasn't the question I asked. I said, what is the mindset? The mindset should be, let's see if it holds and go long. That's correct, because it's a potential exhaustion gap. The pre-market right here, 15-minute chart, is giving us 0 indication to go long. So everything is patterned, and then intraday, it has to set up the way we want it. Typically time it with the broader market, but on something like this on earnings, it's going to be on its own page. Buyers are just going to have to decide when they want to step up or not. Let me see what the implied move was. I'm pretty sure, based on my experience, it was a lot less than that. Well, expected move was $10.76 by Friday's close. So it's $4 greater than the expected move. So yeah, I mean, volatility is going to be off the charts. And so 30-minute high is let's see how it sets up, multiple time frames. And that is either a day trade long and or an out of the money put spread. I always like looking at the cousins. There's UPS. It's also climactic, but it's in a nasty downtrend with weak transports. And this obviously is going to drag down the IYT some more today, because FedEx is a heavy hitter, and you can see pre-market it's down $3.50 or $3.50. And I think that's why LRCX was down, because of Micron. But look at AMD. Tell me what your observation is. If Micron is dragging down the semis today and AMD is opening flat, what does that tell you? Relative strength, that's right. There's still no pattern, but Gustav, I've been saying for a couple days, this will be both a directional long and a put spread long over last week's highs. So that's still a valid trade. I need to post it, actually. Well, it was in the weekend letter, but I canceled it because it took out the stop. But that's fine. Well, I still like AMD. Gold here, an ugly gap down. And it wasn't earnings, I checked. Nothing to do with it. And the Xilinx has also been kind of a go-to strong semi. Look how this started from this. This is a pro gap. This was in a downtrend. It negated this red bar. Deep retracement. Wow, over the high of that red bar was your entry. Look at that. I always like going back and just looking at charts. You've heard me say this many times. Because it's another movie, so to speak. It's putting this movie in your head. So the next time you see this, you have more confidence. Right over the high of this red bar was your beautiful entry. Stop under the low of that red bar. SCS. 1480, it's a gap in a downtrend. GSK, I don't like these ADRs. Tro was on my short watch list from yesterday. Bearish consolidation, no follow through to green bars, topping tails. FCX, that's on a short watch list. Same as Tro, it's ugly. CAT, yesterday morning was on my put spread watch, and it still is over yesterday's high. Win was on my short watch list, but that's too sloppy. Baidu's been on our short watch list for the past 2 days. We traded it once. On this day, we got a nice $4 day trade. I gave it right here on the breakdown. Look at this, yesterday afternoon. Right in this bar, I gave it as a day trade short, because that's right when the spiders were starting to wig out. That was a nice little day trade there. Cron, I have on my long watch list. You had a nice big old gap up, and we have a reversal bar, but it's not a real potent one. But it's still worthy of a watch for the marijuana stocks. I noticed Tilray was up. Weight Watchers here, bearish pro gap here, same thing. It's weak. Facebook is in the news again, more data breach. This looks like a great 30-minute low day trade short. All right, we're in Mo and Twitter. I got them on the other computer. Sienna, I'm waiting for a potent reversal. Came in very ugly, but you know, if it can shape up here, we were looking to sell on January puts. J&J, I was looking to sell puts yesterday because of this bullish pre-market. And then it never gave me a setup I wanted, so I just passed on it. Oracle gap and crap on earnings. NTs I have as a bull put credit spread, but it's a deep retracement here, so I'm definitely not in a rush. We got oil, got beat up yesterday. Oh yeah, BA I have on my other screen, definitely. Yeah, BA I have as a put spread candidate. Sale I have as a short watch. One bear, 1, 2, 3, VAC. Now this one for a day trade looks pretty darn good. Let's watch this as a short candidate. And the Q's here going up a little bit pre-market. UNG, this was a great bear call spread candidate. It's gapping down and weak here. Some marijuana stocks. Tilray, you know, yesterday we were looking at it, it was showing relative strength, and now it's in an uptrend on 15-minute chart. Tesla, nothing. ACB, nothing. GE, little gap up. There was some news about it doing something about spinning off some part of its business. Amazon, nothing. Netflix. Netflix would be a put spread over this little pivot. So over, what is that? You know, 279 and change, but doing nothing. Apple, there's still no potent reversal. But if this low holds, this is what we call a bullish new low divergence. Look at the distance of these lows, this low, this low, this low, this low, this low, this low. Wow, say that 10 times real fast. This low. Sounds like somebody's name. So the distance between these lows is much shorter, which makes the distance to the MA tighter. Intel, hey Gustav, you're our Condor expert. I was